Welcome to Strategic Justice in Action with David Senoff.
Hey everybody, welcome to an all-new episode of Strategic Justice in Action with David Senoff. I'm your host, Mike Leon. David here is the founding partner of First Law Strategy Group, where he focuses on appellate advocacy, insurance bad faith, and public policy litigation. He's got nearly 3 decades of experience. He's argued cases in Pennsylvania, New Jersey, and state and federal courts all across the country. And in today's episode, we're going to be talking about how insurance companies act in bad faith and what policyholders and plaintiff firms need to know when it happens. So, David, good to see you as always. Can you explain for our audience what insurance bad faith means legally?
Sure. Hi, Mike. It's good to see you. Thanks for having me this morning. What insurance bad faith means legally is that the insurance company denies your claim. It can be a claim for auto insurance coverage, life, health, disability, for no really good reason, and that they know that they have no really good reason, but they do it anyway. So, for example, they know that you need a prescription drug, it's covered, but they deny it anyway for some reason, like it's not covered for your particular diagnosis, even though your policy says that the drug is totally covered. And so as a result, that's what we call bad faith. Now, until you find that, sometimes it's a little harder to get the evidence of it, but that's really what it is. They deny a claim when they know they really don't have any good basis to deny it.
And what tactics do they usually or commonly use after a claim might constitute bad faith?
So there's 2 kinds of bad faith, and there's 2 kinds of behavior that they normally engage in. One is the kind that we were just talking about. Let's say they deny you a medication or some kind of medical procedure. One thing they will do is they will constantly request more information from you, your doctor. Do you have any medical journals? Of course, everybody has medical journals lying around in their house to, photocopy for their insurance companies. They will sometimes change the reason why they denied slightly. But essentially it's deny, delay, deny, delay, delay, deny, until finally you get to the last, appeal, and they just continue to deny. That's the way most what we call first party insurance bad faith claims take place. There's something called the third party insurance bad faith claim. So let's say you get in a car accident and, not your fault, but, somebody makes a claim against you anyway. For example, let's say you're in a 3-car pile up, somebody rear ends you from the back, and your car rear ends the car that's in front of you that's waiting at a red light. Totally not your fault. In fact, you just got sandwiched in between 2 cars. Somebody sues you. That's a case clearly that would be covered by your insurance company, but they decide that for whatever reason, they're not going to cover you. And what ends up happening in those cases is a lot of times they leave you on your own. So if someone sues you, let's say the guy who you rear-ended sues you for rear-ending him, they won't provide you a lawyer. If you lose in court, they won't cover your damages the way they're supposed to. They won't even settle the case with the other driver because they're just going to deny you coverage.
Denies, delays, excessive paperwork, all bad faith signs. But let me ask you, David, how does the law treat these insurers that deny some of these claims without these clear explanations like you're explaining?
The law, particularly in Pennsylvania and some other states, does not treat them well if you have evidence of the kind of bad faith we're talking about. For example, in Pennsylvania, the courts can force the insurance company not only to pay your claim, right, whether it's for the car accident or for your medication or whatever it might be, they'll force them to pay the claim. They'll force them to pay your attorney's fees on top of that. They'll force them to pay interest on the money that should have gone to the claim. And sometimes in extremely bad cases, they'll pay what's called exemplary or punitive damages. They'll order the insurance company to pay an amount to punish them. So some amount over and above those three things we were just talking about. And, those amounts, depending on how much the claim was, can be significant.
What about lowball offers, David? In your experience, does that demonstrate bad faith?
Sometimes it does and sometimes it doesn't. So most of the time insurance companies lowball you because, there's an old saying in the law, and I guess in really all negotiations, you never get the number you ask for, right? So if you're negotiating your salary or you're negotiating whatever it is, you might ask for more money than you want, recognizing that you're going to have to negotiate. So sometimes insurance companies will lowball just because they recognize they're going to have to move up. But if they lowball and then continue to lowball, or they increase their offer by $1, I'm being facetious, obviously, but if they're increasing it in very small amounts, that may tell you that there's something wrong. Or they make you an offer of $10,000 and when clearly the case is worth more than that, and then they don't ever move off of that. Then that's sort of a hint or a signal that something else is going on behind the scenes.
David, how do insurer bad faith impact unions, health funds, other large institutions compared to somebody who's just an individual policyholder?
Well, so, it's bad all the way around, obviously, but for the individual, it's bad because obviously you're one person, you need whatever claim you're making paid for. But if it's a union fund that represents thousands of people, and let's say they've decided that I keep coming back to this example, but a particular medication is no longer going to be covered, or for some reason is not covered, then that affects the thousands of people who are insured through that particular union or company or whatever the group is. It's going to apply group wide. And obviously that would have a huge impact on the number of people affected as compared to a single individual being denied.
We talked about the courts a second ago. I want to go back to that for a second. What damages or remedies are available when a court does find an insurer is acting in bad faith?
So like I said, it's going to be dollar for dollar the amount of your claim. Then on top of that, they may order the insurance company to pay your lawyer's fees. Then they're going to order them to pay interest on the claim. So if the claim's $100, they're going to order them to pay some amount of interest on that $100 for the entire period of time that the claim went unpaid, from the first denial until the time of the court order. They then may, on top of that, order punitive damages. And like I said, that number can be pretty substantial. For example, if you have a $10,000 claim, they might award $50,000 on top of that just in punitive damages. So a $10,000 claim ends up costing them $60,000 plus interest, plus your attorney's fees. So it can be, pretty high. And when you're talking about life or health or disability policies, for example, think about how expensive surgeries are, right? So if they decide to deny a surgery, that's tens of thousands of dollars. That's the base amount of the claim in the event that the court finds that it was denied in bad faith. So you think about that being multiplied by 3, 4, 5 times, right? Then that's a pretty substantial amount for the insurance company to pay when they could have just approved it to begin with.
David, let me ask you, at what point in a case should a trial lawyer that maybe doesn't have the bad faith litigation aspect of this, what point in a case should they consider bringing in counsel who solely focuses on bad faith litigation?
So for example, in the car accident examples, we always tell people to bring us in as early as possible. So if you're getting that lowball denial as an attorney and you don't really understand why, maybe it's time to ask somebody to come in, take a look at the file just to see, is there anything that points towards bad faith? In the health insurance area, sometimes we get calls from medical malpractice attorneys who are representing clients who have seemingly been the victim of malpractice, but sometimes that malpractice can not necessarily be the result of the insurance company, but can sometimes have an insurance overlay. So, for example, maybe, in these cases were much more prevalent, I would say in the 90s and early 2000s, but the insurance company or the doctor knows that the insurance company won't approve a particular kind of treatment. Maybe it's a particular chemotherapy or radiation treatment, and the insurance company then denies, or the doctor knows the insurance company will never pay it, and so doesn't even bother to tell you about it or prescribe it, right? And in that case, of course, it's a malpractice case because the doctor has a duty of care to you to tell you what all the treatments are, but it's a bad faith case because the insurance company is tampering with your doctor-patient relationship. So sometimes, even in what people think are garden variety medical malpractice cases, nothing unusual, there can be an insurance component to the malpractice case.
David, finally, for someone that's listening to this, maybe they're a policyholder or the representing firm that suspects an insurance company is acting in bad faith, what's the first thing that they should do, the first immediate course of action they should take?
I would say the first course of action is to document everything. Make sure you're writing letters, emails, and you're getting responses back from the insurance company that confirm that they're just flat out denying you. And that's true whether you're represented by a lawyer. I used to tell people back in the snail mail days, right? Send it certified mail. I still tell people to send an email, but send a copy by certified mail, because I don't know about you, I lose emails all the time. Sometimes they get spammed. Sometimes they end up in my trash, right? My junk. So if you do both, there's no way they can say, hey, we never got your letter. And just make sure you get in writing the exact reason for the denial. And then once you get that, you can call us and we'll take a look at it. And we can, we've done this for long enough that we know pretty much what looks right, what doesn't look right. A lot of people think, for example, when they get a letter from the insurance company that says, we can't decide in the normal 30 days, we need more time, that's evidence of bad faith. A lot of times that's just evidence of they're overworked and they really can't get to it in time. So, but you get 5 of those letters, that's a different story. So, there's a balancing act and it's a fine line, but if you take it to somebody who's been doing this for a while, they can pretty much parse it out.
Yeah. David, thanks for the time and insights on this. Truly appreciate it, as always.
Thank you, and thanks for having me this morning.
And thank you to everybody out there listening to today's installment of Strategic Justice in Action with David Senoff. If you believe an insurance company has wrongfully delayed or denied a claim of yours, or if your firm needs co-counsel on a bad faith claim, visit firstlawstrategy.com today to connect with David and the team. Be sure to like, subscribe, leave a review and comment, or share this episode with someone who needs to hear it. As always, I'm Mike Leon. We'll see everybody next time.
Thanks for watching. Be sure to hit that like and subscribe button and leave us a review in the comments.